Hi friends, Simit here from InformedTrades.com. Today is July 1st, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to positions that I put on the markets, all as a part of helping traders learn. You can learn from my successes, learn from my mistakes. We can all learn together. I'll be going through the material kind of quickly, so if any of this information is unfamiliar to you, or if you're new to trading, want to explore other styles of trading, check out InformedTrades.com. We have a huge archive of learning material covering not only price action swing trading in the Forex market, my style of trading, but many other styles from beginner to experience. Check it out, share your knowledge, set up a practice account, share your trades. We can all learn together. Let's get started with a look at the charts. And today, the first chart that I actually wanted to would take a look at is a chart of oil. There's been a lot of interesting developments from a fundamental perspective in oil over the past week. And right now, from a technical perspective, we're an uptrend. The 50-cent moving average is above the 200 exponential moving average. If we look at the recent swing low, June 5th, to the swing high here, June 13th, we're at a 50% pullback there. Which is also was a former resistance level that was established in March and established again in April. So this to me seems like an interesting level. We have a little bit of candlesticks showing, a wick pattern here showing bulls might be defending it. This could be an interesting level if you're a bull to go long crude oil. Now I'm personally not trading this. This is I believe this is West Texas Intermediate WTI oil traded on the NYMEX. I'm personally not trading this. But I think the technical pattern was interesting, and especially in light of the news coming out of Iraq with the conflict going on there. If a oil pipeline bursts, and Iraq is a major oil exporter, so if a pipeline there bursts, that could be a problem, and that could send oil prices much higher. Technically, here's a pattern to look at. If we were to break down to like 103, for instance, 103.50, I think you could say the technicals or the market did not validate this pattern. So you can probably get it set up with a pretty good reward risk here also. So that's oil. Like I mentioned, that's just something I thought was interesting. I'm not trading it myself. Now moving on to gold. Okay, big potential day for gold because we are currently, let's extend this rectangle a little bit. We are currently outside of the rectangle. We had broken above, which is pretty significant. You could actually extend the rectangle to all the way up to here. So let's see. We did peak above it. Let's see. Now you see, though, that bears came in and pushed it right back down. So this could be an interesting level to short at. That's not my style. You could view this as gold in a range bound, and if you did have that view, it might be an interesting setup to short, especially with this candlestick, a reversal candlestick, basically at the top of a rectangle. Those are two signs that would warrant shorting. However, I'm interested in what happens if we stay above, especially if we close above. As today's session, if we close above 1329, right now we're at 1326.60. So if we close $3 higher, I think you could say we have a breakout of this rectangle. And that, in my opinion, could pay for set the stage for a rather quick move to 1387 or so, right around here, this former high that we saw in March. On the flip side, if this is a true reversal, if we don't close above 1329, and if we have a reversal candlestick here, that could signal that we're headed back down, and we're still in the range, and then we're headed back down to the bottom of the range, which is right at 1271. So that's sort of the basic technical scenario. It's interesting. I do think the bulls have the upper hand at the moment, briefly, but today is definitely, in the next few days, will definitely be very key. Let's see what happens at the now that we're at the top of this rectangle here. Haven't been this high since April 2014. Okay, so that's gold. As I mentioned, I don't have any short-term positions in gold. Everything I'm doing is long-term in gold. And I plan on holding it for a while, years. I think we'll see new all-time highs well above what we saw in 2011. So from either perspective, even if this breaks out here or breaks below, I think you could make a case that it's still a pretty good time to buy if you have the value perspective that I do, that gold's going to go higher in the long term. Okay, so that's gold. Bitcoin has made some huge moves up. Technically, the time to buy obviously was here. 540, and I mentioned I actually bought here 520 when we broke out here. So here, what's interesting here is that this confirms the uptrend that we're in. We had it, so we broke out from the big range here. This is an accumulation phase. Reached the top here, and then we pulled back to 50% here. Let's actually add a AB equals CD pattern, which I think is especially appropriate here. Nope, oops, in this one. Okay, so point A is somewhere around here. Point B is here. Point C. And then point D, 1.53. Oh, it's going to be somewhere right around here. So 750 is 753, a basic target. And let's see, A to B took, we were at A in May 6th, B was June 2nd, so it took about a month. C to D, maybe by July 14th, if this trend continues, we'll be at 753. That's a little tentative, and I think it's more so, AB equals CD pattern, I think it's more so for getting an idea. We'll see if that actually plays out. But the point is, we had a pullback to the 50% level. The bulls tested themselves. The bulls validated themselves. So I think that that definitely signals, more bullish momentum, and a move past these highs is what I was currently expecting. Although let's see what happens when we get to 680. But right now, I think 753 is an interesting target of sorts to bear in mind based on ABC equals CD pattern, getting that D point. So that's Bitcoin. Euro yen, I actually closed this trade out. So now getting on to the Forex trades. It's a good thing I closed this trade. And I moved my stop to break even. So based on yesterday's price action, and based on the fact that we saw mainly this candle right here, which is basically a hammer off the interim support. So a minor support level, but we saw a hammer off it, and really you could argue that this was a hammer too, or this at least had a wick pattern on June 28th and then again on the 29th. So I moved my stop from this red point here down to this black line, and that de-risked the trade. Oh, that's not what I did. I moved this stop level here down to here. Okay, so then the market went right through that, which is good. So I didn't lose any money. My stop got taken out. I de-risked the trade, moved my stop to break even. In other words, the market rallied and hit my break-even point, hit my stop, and went through. So it would have actually hit my real stop where I would have lost money had I not moved to break even. So I'm glad I did that. Unfortunately, the trade didn't pan out. But yen still got some interesting things going on here because, on all the yen pairs, the moving averages are converging. So this could be, I was speculating this would lead to a big move down, but it could be leading to a big move up. We'll see if there's another opportunity to trade the yen coming up. I feel like there will be. Okay, now the one order I'm putting on today, which is ironically an order I canceled yesterday. So in hindsight, here's the order. You can see the order. It's exactly the same. So I had this order on, and I put it on, when did I put it on? I put it on June 25th, I think. And it didn't get filled. I put it on this candle, and it didn't get filled. Then we came back, and in hindsight, it was coming down yesterday. I saw a big red candle. I thought, this isn't really the price action I like. So I canceled it, but then we have this big green candle. So, one could argue whether I was justified in canceling this order yesterday. I don't like to see big red candles and enter on that. I would prefer to see a reversal candlestick pattern, a clear reversal candlestick pattern. Now, sometimes when you wait for candlestick confirmation, that means you waited too long, and you're not good. Like, by the time you get the confirmation, the move has already occurred, or the move occurred. Implicit in the confirmation is the move occurring that you wanted to get in on, so you missed out on it because you waited for it. I don't necessarily think that's always the case. In my experience, that's not always the case, and I may still get a pullback here to 83.56. So we'll see. Definitely, if I had left my order on yesterday, it would have gotten filled, and it would be slightly in the money now. However, I played a little safe, and now we saw the bulls come out. So now that the bulls defended 83.56, let's see if price comes back down and fills me here. So I'm long at 83.56. My stop is at 83.16. My target profit 84.76. The highs we saw June 12th. This is basically I'm risking 40 pips to gain 120, so the reward risk is 3 to 1 here. Pretty solid. I like this trade. Offers good reward risk. My minimum of 3 to 1. It meets that. We're above the 50 and simple 200 exponential moving averages, and we're also at a 61.8 Fibonacci retracement from the swing low to the swing high on June 12th. So same trade as before. The bull stepped in yesterday, so I think or today. So I think it's worth trying it again at that level. That's about it. Only that trade I placed today. No other trades in the Forex market on today. The only other thing I have on the market is, of course, my longer-term position in gold. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.